Welcome back to the channel. My name is Vandell, co-founder of Black Swan Capitalists. So I'm buying physical gold, not paper gold, not ETFs. I'm talking about real, tangible, physical gold coins and gold bars. And as some of you know, I've been accumulating gold for years, and I've been very outspoken about it publicly, and I've always encouraged people to buy gold at times when it was as low as $1,500, $1,700, $2,000, $2,500, and so on. So in this video, I want to walk you through exactly what I'm doing, why I'm buying physical gold, and I'll also touch on why central banks are stacking gold at an accelerated pace. And more importantly, I'm going to touch on exactly what they don't want the average person paying attention to. Okay, so we'll start here. But before we get into it, let me just say, as some of you know, and if you don't know, I'm a long-term investor and a macro investor. So I think in longer terms, not the next day, next year. And I believe in diversification, risk management, and capital preservation. So when it comes to physical gold, I don't buy it to generate a return, okay? I've said it many times. I buy it as insurance, as an insurance policy, long-term financial insurance. Because frankly, it's the one asset in my entire portfolio that I never really have to worry about. And gold provides me that peace of mind. You know, not just because it makes the headlines and mainstream news every time it breaks new all-time highs, but primarily because over time, it holds its value when everything else is still uncertain. And I don't see that ever changing, to be honest. So let me break it down further. We'll start here. Firstly, I'll be covering why I buy gold as protection against inflation and currency debasement. So that's the number one point. Secondly, gold actually has stood the test of time. It has a proven track record of up to 6,000 years track record. It has outlasted, honestly, empires, currencies, and economic systems, and every currency reset. And no other asset class can say the same. And that's a fact. And the third point is central banks, okay? The architects of the modern financial Ponzi system, who understand the system better than anyone else, are accumulating gold at record amounts, okay? And this has been an ongoing trend since 2009. So if it's good enough for Putin and central banks and China, it's good enough for me. So when I look at gold, I don't see it as an investment, and I want to make that very clear. I don't see it as an investment in the traditional sense. So I see gold as a store of value and a stable unit of wealth that basically requires no yield to justify its existence. It's just there and it holds value over time. I'm not buying it to flip it the next quarter. I'm not trading it, although you can do that, but this video is not about that. I buy it so I don't have to sell it. That's the plan, because that would mean something went seriously wrong with the system if we got to a point where I have to get rid of my gold, okay? Now, we'll start with the first point. When I buy gold, I buy it as protection against inflation and currency debasement by reckless central bankers, fueled by greed, okay? And central banks expand the money supply and dilute our purchasing power through printing excessive fiat currency units into the system and money printing. And gold acts as a hedge against that. It's not a theoretical thing, it's a historical fact. Now, before I continue, I just want to say, if you want to understand how the financial system is currently evolving, where it's going, and gain Wall Street level insights and primarily position yourself ahead of this once in a generational wealth transfer opportunity, then you can schedule a call with me and my brother, a one-on-one video call to get more insight and talk about things in detail, or consider joining my private financial market intelligence group on Patreon, which is designed to equip investors with the right information they need to make informed decisions in a world full of nonsense. It's no hype, just actionable macro trends, crypto and digital market research, digital asset research, market cycle analysis, and really the type of financial market wisdom they don't teach in school because they don't want you to know these things. Now, moving on, let me just give you a concrete example of how gold preserves purchasing power over time. And this is the first reason I buy it, to preserve my wealth over time against fiat currency debasement. So, for an example, in 1929, the average home costed around $6,000. And at the time, 10 kilograms of gold was worth about $7,000. Okay? So enough to buy a home at the time. Fast forward to today, in 2025, the median US home cost around approximately $400,000. 10 kilograms of gold, roughly worth a little over $1 million. That's just enough for one house. And actually more than one house. That's enough for 2 houses today. So gold hasn't just preserved its purchasing power when you measure things in gold, like houses and assets. It's actually grown steadily over the decades in terms of buying power when you measure things in gold. And another example that I've said in the past before is in 1980, the median home price was around $70,000 and gold was about $614 an ounce. And if you had 114 gold coins, if you do the math, you could have bought a home. And today, in 2025, the same median home cost about $400,000 today. And guess what? 117 gold coins roughly gets you the same house today. Okay? So when measured in dollars, everything looks like it's getting more expensive. Houses, stocks, assets, everything, goods. But when measured in gold, things become cheaper. And your gold buys you more in the real world, more real things, more real assets when you measure it in gold. So when I buy gold, I'm not chasing returns. I'm basically trying to lock in long-term purchasing power and preserve my wealth over time. And I'm preparing for the future. And I'm not just predicting things, it's a trend. So the system is designed to inflate away the value of fiat currency and debase the debt. Gold is the financial constant that doesn't need a central bank's blessing to hold its worth, my friends. The truth is, that's a historical fact and I don't see it changing anytime soon. And that's why I buy gold. And central banks love gold, okay? So we'll talk on the second point, which is why do central banks love gold and why do they buy it? So first of all, as I said previously in the video, that the architects of the monetary-based system, okay, they understand the inner workings of the system better than anyone, better than all of us. And what are they doing? They're loading up on physical gold in record amounts, okay? This isn't speculation, ladies and gentlemen, this is a fact. And since 2009, central banks have become net buyers of physical gold every single year. What's more interesting is this, when you think about it like this, that recent research already suggests they may have purchased nearly 4 times more gold than what the public has already received information on. So the truth is there's a discrepancy there, and that makes sense because when large players like central banks buy gold or assets or position themselves, they tend to do it discreetly. We only know what we see on the surface, and global central bank reserves have now already surpassed 36,000 metric tons of gold. Already. And these are levels we haven't seen since the Bretton Woods era of the 1960s. Now, think about this. Back then, gold wasn't just a hedge. It was the foundation of the global financial system. Until 1971, we went off the gold standard. So think about it like this. Let me ask the obvious question that most people ask themselves. If gold had a future or no future in the future financial system, why would central banks be buying gold so aggressively? The answer is they would not be, okay, if it had no future. They wouldn't be buying gold, but they are. And if we're heading towards a fully digitized monetary system, a tokenized blockchain-based financial infrastructure, then why would these same financial institutions and the central banks be rushing to accumulate physical assets like gold if we're going all digital? The answer is simple. It's because gold is not only a hedge against failing fiat currency system that they created, it's a strategic asset that's going to play a critical role in whatever comes next, which is the new financial system. So whether it's a Bretton Woods 3.0, a multipolar reserve structure financial system, okay, or a new system of settlement between nations, something we cover very often, that will be on the blockchain technology as a foundation. So it doesn't matter what it is, countries that hold the most amount of gold will shape the rules and basically get a seat at the table to call the shots. And that's the truth. So many don't know this, but today gold is the most in-demand reserve asset among central banks, even though we're going digital. Not Bitcoin, not silver, okay, physical gold. And they simultaneously are working on a digitization blockchain system, stable coins, CBDCs already in development, and tokenization. And it's hidden in plain sight. They're still buying gold, physical gold. So their actions speak louder than their words. And that's why I always say, watch what they do and not so much what they say. And if you follow the money, you see that gold is a priority on the agenda, and their actions demonstrate that. The third point is gold's 5,000-year track record, up to 6,000 years. That's not just a figure of speech. I'm sure you've heard that before, but it's a fact. It has outlasted empires. It's outperformed collapsing currencies, which we've seen through over 4,000 years, and it's survived financial system resets throughout history, and we're currently living through a reset. So there is no such thing as gold 2.0, okay? Despite what some of the financial elite, talking heads, mainstream media people would like you to believe, the truth is they're uninformed or deliberately trying to mislead you. And that's the deception there, okay? There is no gold 2.0. They'll tell you gold is outdated, but their actions, the central bank's actions, say otherwise. And they don't want people to understand that. So look at what central banks are doing, not so much what they're saying. And they control the financial monetary system. Now, gold's track record speaks louder than any narrative that you'll hear on the media. And that's a historical fact as well. So if you look at the available data over the past 10 years and the data that we have access to, it shows that they are continuing to buy gold. So when it comes to preserving wealth, remember, trust is everything. And gold has earned that place with the trust over millennia. So not just over a few decades, couple of years, but through the rise and fall of civilizations throughout history. Okay, so from the pharaohs of Egypt all the way to the emperors of Rome, across major powerful structures throughout history, gold has always been money in the eyes of the elite. Okay, and it's always been wealth. And here's something that most people never really stop to consider or aren't really too informed on, but throughout history, all real wealth has been derived from the ground, okay? Land, energy, resources, commodities, especially gold. That's the kind of wealth that the financial elites and the banking elite are quietly accumulating, and they don't want people to pay attention to. That's not speculation. That's because they want control over it. And the ultra wealthy and the banking families, they want to take as much wealth as they possibly can from the people, okay? And not necessarily in the sense of fiat currency or dollars, but in the sense of resources, which is where all the real wealth derives from. And they don't want you thinking in terms of resources. They want you thinking in terms of digital convenience, in terms of owning, call it nothing, and be happy. So for me, you probably all know this, but crypto is wealth creation and generational opportunity to create wealth. And gold is wealth preservation. And that's how I balance the two. So meanwhile, the central banks are loading up on gold, not stocks, not crypto, not silver, gold. Central banks have been net buyers of physical gold, stocking it up since 2009. And their accumulation has accelerated very sharply in the year 2022, 2023, and 2024. And it will continue to rise, in my opinion. So gold isn't just a relic, it's the foundation and will be a foundation of the new financial system. And they know exactly what they're doing, even though they try to play dumb. They know exactly what they're doing, and this is part of the long-term game plan. And it ties into digital assets, but gold will be a key role in the new system. And I get this question often, so I'll touch on it. How much is gold going to go up? Okay, but I think the better question we should be asking is how much will the US dollar continue to decline in value? Now, this is important because that's what really drives the price of gold. Gold isn't just rising in value, even though it seems like it on the surface. What's happening is the dollar is falling in value. And the currency that we price gold in is dollars, okay? So when gold rises, because of money printing, we measure it in fiat terms. And that's how it works. So what you have to understand is we price gold in fiat currencies. So as governments continue to print, expand the money supply, and pretty much inject credit into the system, more dollars are circulating now, chasing a limited supply of real assets like gold. And because we measure gold and assets in fiat currency, the price is up. Now, how much money will they print? Well, we know they're going to print money and the money supply will increase. We don't have a precise number, but based on current monetary policy, global central banks are expanding their monetary base, which means debasing the currency at a rate of between 8 and 10% annually. The big beautiful bill just got passed. That's a form of money printing and credit creation. And some cases even this could accelerate faster than we think. But the point is, I don't see it stopping anytime soon. They're going to continue to print money. So anyone telling you that they're not going to is misinformed, unfortunately. And this debt-based system requires continuous, constant money creation and credit creation. It's baked into the business model of this Ponzi financial system. Okay? So fiat currencies, especially the US dollar, must be created endlessly in order to keep the financial system afloat and prevent it from collapsing. It's basically artificial life support being injected into the system to keep it alive. And that injection of life support is money printing and liquidity. So it will continue until it doesn't, okay? So eventually, this ends one of two ways, but the outcome is pretty much the same. Number one, a collapse of the weight because of unsustainable debt, which will take many years, and it can happen in slow motion, and then they will react with introducing a new monetary system, okay? The second outcome, a controlled demolition, a reset, which is pretty much what we are seeing now, that transitions us into a new monetary system little by little, which will also take a long time, but possibly with crises in between to basically accelerate the process and get us there faster with a problem reaction solution. And this would be underpinned by blockchain technology and digital infrastructures on the blockchain, as we've talked about for many years. But either way, the long-term outcome, when you zoom out from a big picture perspective, the destination is pretty clear. Given where we are in the currency cycle, we're at a period of huge currency debasement about to take place, and the outcome is going to be the same for the most part. The question is, how are we going to get there? So either way, currency debasement is not stopping anytime soon. Fiscal recklessness from government and monetary overreach from central banks and bad monetary policy, it's not temporary. It's structural. It's built into the system. So they have to do this. And in simple terms, a rigged and unsustainable financial model is basically a legalized Ponzi scheme. And our only real defense is owning real assets and hard assets that retain or rise in value as fiat currencies decline. Gold, wealth preservation over time. Certain cryptos, wealth creation, okay? And those assets, they have a very strategic role in anybody's portfolio. And I just want to make this clear. The cycle isn't ending tomorrow, okay? So the key right now is to position yourself accordingly and do it while you still can, because it's just a matter of time before the gold price continues to rise. And I'm forecasting that in 2026,